Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 7th, 2025, and we're diving into the Walt Disney Company's latest earnings report for the second quarter of fiscal 2025. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's always a pleasure to discuss Disney, especially given their iconic status in the entertainment industry.
Absolutely. Disney has just released their Q2 earnings, and there's a lot to unpack. Let's get started. Revenue and profitability overview. Let's start with the top line. Disney reported a net revenue of $23.6 billion for Q2, which is a 7% increase compared to last year. John, can you shed some light on this?
Absolutely. The revenue growth is quite impressive, driven by strong performances across their segments, particularly in entertainment and experiences. Income before taxes also saw a significant increase to $3.1 billion, up from $0.7 billion last year, indicating robust operational efficiency.
And what about their earnings per share?
Disney's adjusted EPS for the quarter came in at 145 cents, which is a 20% increase from the previous year. This is a strong performance, especially considering the forecast was $1.18. It shows Disney's ability to exceed market expectations.
Segment performance and strategic initiatives. John, let's delve into the segment performances. How did Disney's different segments fare this quarter?
The entertainment segment saw a significant boost, with operating income rising to $1.3 billion, a $0.5 billion increase from last year. This was largely due to the success of their direct-to-consumer offerings and content sales. However, the sports segment faced a decline in operating income, down $91 million, primarily due to higher programming costs.
And what about the experiences segment?
The experiences segment, which includes parks and resorts, reported an operating income of $2.5 billion, up by $0.2 billion. This growth was driven by increased attendance and spending at their domestic parks, as well as higher consumer product sales.
Future outlook and guidance. Looking ahead, what guidance has Disney provided for the upcoming quarters?
For Q3, Disney expects a modest increase in Disney Plus subscribers, which is crucial for their direct-to-consumer strategy. For the full fiscal year 2025, they are projecting an adjusted EPS of $5.75, a 16% increase over last year. Additionally, they anticipate cash from operations to reach $17 billion, which is $2 billion higher than previous guidance.
That's quite optimistic. What are the key drivers for this positive outlook?
Disney's confidence stems from their strong content pipeline, including upcoming theatrical releases and the launch of ESPN's new direct-to-consumer offering. They are also focusing on expansion projects within their experiences segment, which should drive further growth.
CEO insights and strategic priorities. John, what insights did CEO Robert A. Iger share about Disney's strategic direction?
CEO Robert A. Iger emphasized Disney's outstanding performance this quarter, highlighting a 20% increase in adjusted EPS driven by their entertainment and experiences businesses. He mentioned that Disney is building for growth and executing across strategic priorities, with exciting projects like ESPN's new direct-to-consumer offering and numerous expansion projects in their experiences segment.
It sounds like Disney is well-positioned for the future.
Indeed, they are. Iger's optimism about the company's direction and outlook for the remainder of the fiscal year is a strong indicator of Disney's strategic focus and potential for continued success.
Key takeaways. In summary, Disney has delivered a strong performance this quarter, with significant revenue growth and an impressive increase in adjusted EPS. Their strategic initiatives and future outlook appear promising. John, any final thoughts?
Disney's ability to exceed expectations and their strategic focus on growth and execution make them a compelling investment prospect. Their diverse portfolio and strong content pipeline position them well for future success.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you enjoyed this analysis, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Disney's performance in the comments below. Until next time.